please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But first, let's get to the big global story this evening. Trade war between the world's two largest economies has escalated. China has finally announced new tariffs on over 100 goods imported from the USA. Now, this retaliatory move comes just 24 hours after the Trump administration revealed its proposal to impose new tariffs on about 1,300 Chinese products. CNBC's Eunice Yoon joins in now from Beijing to decode this rapidly developing story for us. Eunice, you have been speaking to top Chinese government officials. What are they telling you in terms of the impact and the ripple effect that will follow now?
Earlier today, I was speaking with the vice finance minister who told me that China doesn't want to see a trade war, but that it also will not step down. This is what he had to say.
China never yield to the outside pressure, and we hope, based on mutual respect, we can constructively find a way to solve the problem, and we can look forward to build up. That's great country relations and jointly make contribution to the global economic development and peace. That's fundamental important for China, for US, and for the world.
And this is a $50 billion package, so it's tariffs on all of these types of goods, 106 items, 25% tariff, and some of the goods are things that we've talked about in the past: beef, autos, aircrafts, as well as soybeans. I asked him about soybeans in particular just because China needs American soybeans and buys so much of it. And he said that's true, that China does have a very good relationship with American farmers and hopes to continue to have a good relationship with American farmers, but that at the end of the day, China can always buy from someplace else. He wanted the Trump administration to come to the table and to be able to have discussions. But he said to me right from the start that he felt that, and a lot of Chinese officials felt that the Trump administration wasn't hearing the Chinese, that the Chinese have been pushing for discussions, but that they feel a bit shut out by the Trump administration and that those discussions aren't really going anywhere. So in the meantime, while the Trump administration hits China with a big package of tariffs, he says that China is going to do exactly the same thing.
Okay, Eunice, thanks for breaking that down for us. In fact, China's response to the latest US tariffs has hit financial markets across the world. So, for instance, in Asia, the Japanese Nikkei ended a tenth of a percent higher. But that index was the solitary gainer. The Shanghai Composite in China ended with slim losses, while the Hang Seng in Hong Kong and the South Korean Kospi saw similar sharp cuts. It's a similar picture in Europe, where the German DAX has lost over 1%. Look at that, losing about 1.6% as we speak, 200 points down. The CAC losing over 1%, and the FTSE also losing almost 1%, down by about 53 points. The US stock market is expected to fall sharply when the trading does begin. So Dow right now is down about 1.3%. That is in the futures market. Now, China's retaliation to Trump's trade tariffs weighed in on the Wall Street as well, as indices saw a sharp dip and failed to recover till the closing bell. In fact, the Nifty and the Sensex saw a sharp dip as soon as China announced new tariffs on US products. The Nifty ended with cuts of more than 1%. The Sensex managed to hold on to that 33,000 mark. Mid-caps fell in line with benchmark indices and held on to that 19,000 level. Banks relatively underperformed and ended more than 1.5% in the red. Let's bring in Anuj Singhal to decode the day's trading action for us. Anuj, what do you make of today's move? Largely a heady cocktail of global markets impacting the Indian equities.
Well, bad day for the bulls today. The market had a decent start, but midway through the day, there was a big decline. In fact, China's retaliation to US was just a trigger. It looked like the market was anyway ready to fall, but that acted as a perfect trigger, and the market was down quite a bit. The Bank Nifty led the fall, as you would expect on a day like today. The metals were down. Even IT didn't support the bulls, which was also quite interesting. In terms of stocks dragging the markets, the most HDFC Bank was right on top, and that was the other worry for the bulls. It wasn't ICICI, it was HDFC Bank that dragged the Bank Nifty today. L&T, HDFC were other big losers. Metals were down, so Tata Steel, Hindalco, Vedanta all down today. Other index losers included names like UPL, Titan, Bajaj Finserv. So this tradition of stocks which get into the index after a big rally correcting continues. On the gaining side, though, there were a couple of stocks which looked really interesting. Tata Motors and Eicher Motors both had positive news after a long time and both did well. Bajaj Finance was also higher. In the F&O space, some big losers today included names like Adani, HCC, PC Jeweler, Voltas, JSPL and Sun TV. On the gaining side, the ADAG pack did well. Two listings today, both disappointing, more particularly ICICI Securities, which ended at the low point. Tomorrow you have lots of triggers. The reaction from US would be interesting. There's a weekly options expiry. There's RBI monetary policy. Promises to be a cracker of a day.
Okay, of course, that is something that we'll be watching out for. Anush, thanks for joining in with that. And Anush talked about the RBI policy coming in tomorrow, and that's the big event that we will be tracking. The 6-member Monetary Policy Committee, headed by RBI Governor Urjit Patel, is meeting for the first time in FY19. The two-day meeting comes at a time when pressure has been mounting on the Monetary Policy Panel to cut interest rates in the wake of declining retail inflation and the need to fuel growth momentum. Is the panel expected to yield to these demands, and what are the other big issues on its agenda? Lata Venkatesh is here with the highlights from the CNBC TV 18 poll. Lata, what can we expect?
Well, a cut is certainly not on the cards, simply because the monetary policy's given mandate is 4% inflation, and we're not running below 4% for the Monetary Policy Committee to be giving a cut. And so one part of the poll is very clear. 100% of those polled by my colleague Ritu Singh said no action is expected, no rate cut, no hike, status quo policy. But what the market will watch out for is that next table, you know, how much of a hike can you expect in the remaining part of the year? And their street is divided, with 40% actually expecting a hike sometime down the line, with only 60 saying no hike at all in the coming 1 year. Now, what will therefore the market watch out for? All they want to know is there a hike going to come, and how soon? So they will watch out for what the Reserve Bank says about growth and about inflation. Will growth be lowered? Will be the question that they will be asking. The Reserve Bank's current GVA for the current year stands at about 7.1 to 7.2 for the first half, and 7.3 to 7.4 for the second half. Overall average is only 7.2. So will that be unchanged or not is what the market will want to know. If it is lowered, it will be seen as a dovish sign, and there are possibilities that it will be lowered, considering the trade war, considering that it's an election year, and considering that banks are pretty weak. So that will be seen as a dovish sign. The next important thing markets will watch out for is, will the inflation trajectory be raised? At the moment, it stands at 5.1 to 5.6 for the first half, likely to remain that way, and the second half 4.5 to 4.6. Will that be raised? Here again, we have a bit of a divided house, with some people actually expecting the Reserve Bank to lower the forecast, and a very small group, just 10%, expecting that it will be raised. If it is raised, it will be treated as very hawkish. The RBI may not actually raise, but may give indications that there is an upside risk to inflation. Even that will be seen as pretty negative. So that's the tone, really, that the markets will watch out for. One or two side issues. The total foreign investment in gilts is something the Reserve Bank said it will review and revise. So if that limit is raised, that will be, of course, a near-term positive for the bond markets. And of course, there will be, in the press conference, definitely lots of questions on frauds and other kinds of practices, sharp practices in the banking system, public sector and private sector.
Oh, absolutely. The allied questions are going to be what we'll be watching for very closely. Lata, thanks for joining in with that comprehensive preview. We will take a very short commercial break, though, on that note. But up next, lenders to Binani Cement get into a crucial huddle. What are the expectations? Exclusive details when we return. Welcome back. Now, in what will set a precedent for insolvency cases, lenders to Binani Cement are set to meet today to consider an out-of-court settlement offer for the company. A meeting of the lenders has been convened after the National Company Law Appellate Tribunal ruled that lenders and Binani Industries may settle the insolvency matter outside court if they so wish. Now, Nisha Poddar and Ritu Singh are joining in with details on the story. Coming to you first, what can we expect from today's meeting? And, are we expecting some kind of clarity with respect to bids and the confirmed bids, perhaps Ultratech obviously coming out?
Well, Kritika, everyone's hoping that there'll be some end to this stalemate and this never-ending saga between Dalmia, Ultratech and Binani Cement to settle the insolvency proceedings. So as directed by the National Company Law Appellate Tribunal, the lenders have convened a meeting today. They will consider the out-of-court settlement offer that has been offered by Binani Industries to the lenders only today. Now, of course, the background is that Binani Industries' offer includes a deal with Ultratech to buy 98% stake of Binani Cement for a consideration of 7,266 crore rupees. That sum will then be used by the Binani industry promoters to repay the creditors, the both secured as well as unsecured creditors of Binani Cement, to settle the dues. Now, of course, there was another contention by the bankers that the amount required is well over 8,100 crore rupees and not just the 7,300 odd crore rupees that Binani Industries is offering. But do remember, even as bankers are questioning the source of funds, we've seen a letter from HDFC Bank, which is sort of a comfort letter to Ultratech Cement for a sum of 7,300 crore rupees, guaranteeing that this money will be repaid or paid if in the event of them taking over Binani Cement. So that settles the matter. But of course, now the ball is in the lender's court, whether or not they accept this offer or go ahead with the previous H1 that they had selected, which is Dalmia Bharat Consortium with India Resurgence Fund.
Okay, Ritu, thanks for joining in with that. Nisha, coming to you now. Ritu was talking about Binani Industries' plan to present its offer to the lenders today. You have an exclusive news break on that very offer and the breakup. What are you picking up?
Yes, thanks for that, Kritika. We have a blueprint of what really Binani Industries offered to the lenders, and that is under deliberation right now as we speak, and we'll have to see which way the lenders really swing at this point. But to put all of those numbers into context, what in total Binani Industries has offered to the secured and unsecured lenders put together is a figure of 7,229 crore rupees. Now, out of that figure, there are various divisions and types of creditors that have been bifurcated, and very, very strict deadlines of 2 to 3 days, 30 days, within 30-day settlement and all that have also been given as part of enticement for this particular proposal to be taken up. Just to take you through the secured financial creditors, in total, 4,049 crore rupees have been worked out to be, and in full payment is what they have offered to pay. The big ones amongst the secured financial creditors are IDBI with 336 crore rupees, BOB 428 crore rupees, Canara 370 crore rupees, Bank of India and SBI also have substantial bids. As far as the unsecured financial creditors are concerned, they also offered to pay in full at 2,427 crore rupees, and the big ones amongst them is IDBI Bank with over 1,500 crore rupees, Exim, which remember is an aggrieved party, 620 crore rupees in full, Bank of Baroda 171, and SBI, Hong Kong as well as Bahrain, who have been aggrieved parties, also offered full payment in total 60 odd crore rupees. Also offers to pay the trade creditors 443 crore rupees. So this is the blueprint of the offer that has been presented, of course much higher than Dalmia Bharat's offer. But here, the bigger question of whether to go out of IBC, whether COC gives a nod, whether lenders agree, is the big, big question.
Obviously, Nisha, that is something that we'll be watching for very closely. But thank you for that detailed blueprint, and thanks to and Nisha for joining in with those two exclusive stories. Sticking to this story, we don't want to interfere with the insolvency and bankruptcy process. That is the government's first reaction to the battle for Binani Cement between Ultratech and Dalmia Bharat. Now, the secretary at the Ministry of Corporate Affairs also made it very clear that the centre wants the sanctity of the IBC process to be maintained. In fact, he also went on to say that it isn't a good idea to deviate from the process when the resolution plan is submitted. Welcome back on to an exclusive news break. In the PNB Nirav Modi scam, the Enforcement Directorate is claiming to have made a crucial breakthrough over the slew of shell companies allegedly used by Nirav Modi. Utkarsh Chaturvedi, who has been tracking this story from day one, is here with the details. Utkarsh, first tell us about the latest findings, and also what can we expect from the ED now in terms of actual action that can take place now that a money trail has been found?
Kritika, remember when we exposed the modus operandi in this case, we had said that the clutch of shell companies, which was used to really divert these monies into different countries, also to get back into the country, is a missing link. Now, what we are picking up from our sources in the Enforcement Directorate is that they have managed to identify 30 companies who were actually shell companies, but all the money from LOUs went to these companies. Now, what we are also picking up is that it is somewhere around 4,000 crore rupees, which is still in these shell companies. 2,000 crore rupees has come back to the country through the Hawala route, is what we are picking up. Now, the directors of these companies are Indians living abroad. What we are picking up is that Enforcement Directorate has questioned some of these individuals, but what we are also picking is that ED is going to approach the Ministry of External Affairs to revoke the passports of some of these directors so that they can be present for questioning. Now, remember that ED made its first arrest way later than CBI. It arrested Shyam Wadhwa, who was the VP Finance, and ED believes that Shyam Wadhwa was very instrumental in setting up all those shell companies. And what our sources in ED say is that it is from Shyam Wadhwa they really got all of these details. Also, what we are picking up is that it is in the next 60 days is what ED will look to file the first charge sheet in the case, and is confident of making a good move.
Okay, fair enough, Utkarsh. Thanks for joining in with those important and crucial details in the Nirav Modi saga. But here's another exclusive story that Utkarsh broke earlier today. There are new developments in the alleged nexus between ICICI Bank CEO Chanda Kochar's family and Videocon Group's Venugopal Thuth. We learned from sources that the Serious Fraud Investigation Office, or the SFIO, has written to the Ministry of Corporate Affairs seeking its approval to probe the ICICI Bank and Videocon case. In fact, sources tell us that SFIO has already submitted a preliminary report to the MCA on this very case. The SFIO had received a complaint against ICICI Bank and Videocon in February this year. The Ministry of Corporate Affairs is expected to get back with some clarity in a week's time. So that is something that we are picking up from our sources at this point in time. But moving on, cheer for farmers in the Indian economy. Weather forecast firm SkyMet says that India is likely to receive normal monsoon this year with a 0% chance of drought. According to SkyMet, rainfall during June to September is expected to be 100% of the long period average of 887 millimeter. However, according to SkyMet, there is also a 20% chance that the monsoon will be below average. We spoke to GP Sharma, the president of the Meteorology and Climate Change at SkyMet. He says that monsoon will begin on a good note.
This monsoon, expect it starts on a very good note in the month of June itself. The opening month should have a excess rainfall, I will say. It will go up to almost about crossing 110% even. Okay. But then little less rainfall, we see a marginal deficit coming in the month of July and August as well. But that's deficiencies to the tune of about 3% in the month of July and then about 4% in the month of August. But September makes up again, I think it should end on a rainy note with about 100%, 101% to be exact, of normal rainfall.
All right, with that is a wrap on this edition of After the Bell. Thank you so much for watching the show. Stay tuned to cnbc TV 18 Markets Today Talk Back. We'll take all the action forward on the other side of this very short commercial break.